Welcome back to HFO Multifamily Market Watch, your trusted source for information for apartment owners and investors. Multifamily Market Watch is presented by Pacific Exteriors Northwest, a contractor specializing in siding and exterior envelopes and delivering exceptional quality and service for over 30 years. And by Gantry Incorporated, the nation's largest independent mortgage banking firm.
Welcome back to Multifamily Market Watch. I'm Greg Frick, partner at HFO Investment Real Estate. And today we have with us Joe Cortright of City Observatory. Joe, thank you for coming back to speak with us. It's been a long time since we've seen you.
Great to be back.
Now, I know City Observatory is like a kind of a think tank devoted towards analysis of cities and policies that shape them. But we had talked about maybe you coming in and giving your perspective on the national kind of economy and where we are. So
Sure.
Then we'll get a little bit more specifics. So, how would you characterize the U.S. economy right now? I mean, this is the middle of October. Where do you think we are? Are we soft landing, slow down? What are the indicators saying to you?
Well, first of all, I think there are two levels or two perspectives you want to take on the national economy. And one of them is our traditional cyclical macroeconomic approach, which is, do we think the economy is expanding? Do we think it's contracting? Are we concerned about recession? And usually the way we think about the economy is this very well-honed machine that's got some dynamics that cause it in certain circumstances to grow and in other circumstances to grow more slowly or actually contract. And right now it looks like we're in kind of a slowing phase.
Join the HFO community and get weekly multifamily intel. Click to subscribe.
So then how, as an economist looking forward, with these structural changes, how do you factor that into kind of your projections as where we're going to be? I mean, because it's kind of like you said, it's a kind of a new landscape that we're looking at.
Well, I think actually there's we as economists, and the particular branch of economics is called econometricians. They're the people who build these elaborate statistical models of the economy. And they're really based on the assumption that trends will continue progressively over time and that they'll be consistent. And actually, I think that's a handicap to understanding the risks that we face right now, because I think we're really, as I said, doing fundamental damage to the mechanisms that help drive the economy. So I start with my baseline as sort of what's the trajectory on, but also ask what the possibility is, what the potential is for a lot of these risks to materialize and to affect the functioning of the economy.
And then when you're looking at things that we don't have experience with or history with, how you factor that in and how that trickles all the way down or gets into the whole economy. I mean, it's tough to kind of project out where where this effect today is going to have in 5 or 10 years.
Yeah, it's basically we've built really elaborate models that are calibrated based on a world that we're not living in anymore. So the risks are that it's called out of model or out of period forecasting, and so very, very difficult to know. And then that's reflected. I mean, we know this in our daily lives in a lot of uncertainty that people have about policy, and certainty is really important to making, in particular, investment decisions. You want to have some idea of the world that you'll be operating in, what prices will be, what demand will be, what the tax structure and legal structure will be, in order to manage those risks. And that's the really, really difficult thing to do. And I think that's a big risk to the U.S. economy right now, is that people are just holding back because they're not sure about where things are going.
Which is interesting you bring that up, because we get asked all the time about, in our world in real estate, it's, interest rates and what the Fed's going to do. Mm-hmm. I mean, where do you see with what's going on there? I mean, do you think we've got a balance between inflation control and economic growth? Is it because of the uncertainty? Is it more political? Is it not? I mean, what do you look at when you're looking at what the Fed may do or going to do in the future?
Yeah, that's a really interesting question. Again, I think short term, and if you look back over the last 9 months, things have stayed relatively within the kinds of parameters that we would expect. But there are real questions now about Fed independence with the removal of or attempted removal of one of the governors of the Federal Reserve, the president's desire apparently to replace the chair of the Federal Reserve, and concern about the politicization or political control over Federal Reserve and Federal Reserve policy, which could be very damaging both short term, but then also when you look at the rest of the global economy. That's one of the things that has made the U.S. so strong and so dominant in the global economy, is the fact that you have this independent monetary control authority that gives people a great deal of certainty and confidence in the value of the U.S. dollar and how U.S. monetary policy will be run. And again, there's a lot of uncertainty about that now, and that's a big danger going forward.
And we see some of that in the lack of the 10-year, which is a longer horizon, the lack of the movement in the 10-year, whereas we see the Fed, with the rate drop in the short term, but we're not seeing the corresponding with the 10-year. Those bond yields are going up because of the uncertainty and from a worldwide perspective of the United States.
Yeah, and like I said, I don't think we've seen anything way out of bounds in terms of what's happened with stock markets, where the financial market is, and what the Fed policy has been. Again, but I think there's still risks in all of those categories.
And as looking back historically, has there been a time in history where we've seen this kind of systematic changes that you can relate to, or is it kind of uncharted waters?
I think we're largely in uncharted waters here. I think, if you look back over the last, 70 years or so, sort of the post-war period,
right,
with the modern U.S. economy, with our increasingly globalized economy and our U.S. The dominant role of the federal government, particularly after the New Deal, and then the institution of monetary policy, all that stuff. I don't see any comparable period in U.S. history where we've had as much uncertainty as we're facing right now.
Now, then again, I know you brought up migration and demographics. Mm-hmm. I mean, what do you see regarding that over the next 5 years, especially like in the Pacific Northwest, but then also nationally? Is we do know birth rates are going down. Mm-hmm. From a population growth, it's going to be through immigration. What as an economist, what do you look at on that?
Well, first of all, I would frame all of this in context of the national variables. I think Oregon's economy, to understand the big risks and the big factors affecting Oregon, you need to think about it in a national context. And clearly, there's been a major change in our attitude towards immigration, mm-hmm. And that, as I've mentioned, plays important roles in a number of sectors. That said, I think that's more so for Oregon. I think if you look at Oregon is a state that has grown disproportionately as a result of migration. So the extent that migration slows, that has a somewhat larger effect on us.
In Oregon versus some of the other regions.
And then we're a little bit more oriented towards international trade than the typical state in the United States. So things like high tech, lumber and wood products, even our ag sector, are all tied more closely to the international trade than in the typical state in the United States. And that makes us a bit more vulnerable, I think, than other places. But the big factor is what happens nationally. We'll see the same thing and maybe a bit more so that we see nationally.
As opposed to what's here. And then the other big topic I think that comes up in our world is housing and affordability. Mm-hmm. Locally and nationally. I know some of it's very regional with construction costs going up, borrowing costs going up. I mean, what do you see happening in terms of demand? Well, I mean, demand will be a little bit tied to immigration and things mm-hmm. like that. But I mean, what do you see? Is there a fix, a recovery on that?
Boy, that's, I think, very, very difficult to forecast at this point, because I think there are a number of sort of conflicting sort of trends. One is, we know the national economy, Oregon economy are slowing somewhat. We see an unemployment rate pushing up to around 5% in Oregon, which historically is relatively low. We used to call that full employment, but it's higher than it's been in the last 5, 6, 7 years. And that obviously is a drag on the housing market when mm-hmm. unemployment is rising, when the economy is growing more slowly. And then, as we all know, interest rate policy plays a really pivotal role here too. And again, it's hard to say where that's going. Does the Fed loosen in the anticipation of a weak economy, or are they more concerned about inflation? And frankly, I don't have any kind of crystal ball that would give me any confidence about knowing where.
Well, I was saying in some other article, I was talking to somebody about, we can talk about the Fed dropping rates because of the economy. So it's kind of a double-edged sword. Yes, it helps on the housing side or helps on the investment side in terms of if you're leveraged or borrowing money. Yeah. But then is it being done because we have to slow down the economy?
It's an acknowledgement. It's an acknowledgement of weak demand.
Right, and then how does that trickle all the way through to housing demand and apartment rents and things like that?
Yeah,
so.
Absolutely.
The other thing we're going to talk about is a little bit is kind of the Oregon and Portland economic outlook.
Yeah.
In terms of, how resilient Portland is to national downturns. We always used to joke we were always late coming in and late coming out of these. I mean, do you see that continuing? What's your kind of take on that?
Well, Actually, I mean, that's a generalization,
Right.
and it's not always true. I mean, every recession is a little bit different. And if you were to go back to, say, 1990, 91, the U.S. economy had a fairly significant recession. It barely grazed Oregon. They had essentially no impact in the Portland metropolitan area. Then there have been other times, if you go back further than that, if you go back to the early 80s, we were much harder hit than the rest of the country. So it really depends on the nature of the recession and the particular recession. I think this time maybe we're a little bit more vulnerable, again, for the factors that I mentioned, that some of the industries, the tech sector, and
Relying on
industries are
trade.
exposed to international trade. Oregon tends to be a bit more vulnerable, I think, this time around. But I don't know that it will be dramatically worse. I mean, as goes the nation, so we are likely to go, and maybe just a little bit worse.
Okay. And then, I know, in your publications that we see a lot in City Observatory, talk a lot about infrastructure and transportation. ODOT's got some big projects. Kind of talk a little bit about, those two kind of major projects. You have 5. There's the, Rose Quarter, and what that means, and we can kind of get into some detail on those. Yeah.
So the Oregon Department of Transportation is proposing a number of very large projects in the Portland metropolitan area. They're essentially $1 billion a mile
mega projects,
freeway expansion projects. One of them is the Rose Quarter, which is basically right outside our door here.
Right.
And it's a $2.1 billion project now. Originally, when it was proposed, it was a $450 million project, so it's more than quadrupled in price.
To 2.1.
To 2.1
That's today,
billion.
who knows?
That's today and could go higher. The other project that's out there is the Interstate Bridge, so-called Interstate Bridge Replacement Project. It's estimated to be as much as $7.5 billion now, but that cost estimate is almost more than 2 years out of date, and is likely to go into the $9 or $10 billion range. So these projects have become vastly more expensive. And the other thing I would say about both of them is, they get characterized as relatively minor, and how they could be minor for these price tags. It's hard to imagine. But
Right.
The Interstate Bridge Replacement Project is actually rebuilding 5 miles of freeway, 7 interchanges, widening it to 10 to 12 lanes. And the actual cost of the bridge itself, the bridge replacement that everybody talks about, is maybe 20% of the total cost of the project. That's because the two highway departments have said, well, as long as we're going to rebuild that
We're gonna
bridge,
do all this.
let's do everything else as well. And I just describe ODOT as the, no offense to anybody watching here, the kitchen remodeler from hell. It's somebody who gives you a low bid on fixing your kitchen, tears everything up, and then says it's going to be 3 or 5 times as much as their original estimate. And ODOT has done that consistently for decades.
And then, we talked about this off camera a little bit about the dependent upon federal funds for some of these projects, and how that's changed from where we are in terms of the expectation. I mean, kind of highlight a little bit of that.
Yeah. So the Rose Quarter project, in theory, got a $450 million grant from the federal government under President Biden. Trump, with his big, beautiful bill, rescinded the money. Essentially, all of the money for that project, $400 million, went away. So that project is dramatically short, as well as having quadrupled in price. The Interstate Bridge Replacement Project is counting on more than $3 billion from the federal government. It was awarded about $2 billion by the Biden administration, but there are signs that the Trump administration is slow rolling and may rescind previous highway grants that they've already made. And in addition, that project, the Interstate Bridge Project, is asking for big round numbers, about $1 billion to pay for light rail across the river. And I think there's very little indication that...
And that would be coming from the federal government asking?
That's all from all asking for a grant from the federal government, and they're counting on getting that from the federal government. And actually, the House of Representatives in its last budget zeroed out money for new mass transit capital projects. So I think the likelihood that there'll be the kind of federal money that they had hoped for a few years ago is very, very much in question today.
And then on top of that, we've got the special session here in Oregon for the transportation bill. I mean, what do you see? Do you see these projects going through? Was it with the lack of federal funding? They're going to be dead on arrival. What's your crystal ball say?
Well, I think if there were any logical approach to the financial outlook for the Oregon Department of Transportation, we'd be saying we don't even have enough money to maintain the existing road system. That should be our first priority, is preservation, fixing potholes, plowing roads, painting lines on the roads. And for years, ODOT has said that they don't have enough money for that. Meanwhile, they've been cobbling together money and then promising to spend literally billions of dollars on these very expensive projects. And I think that they've got their priorities reversed. We need to emphasize fixing and maintaining the current system, making sure that it works, and also making sure the buses run, which is really important to the economy. And then once we've taken care of that, then we should talk about right-sizing these projects so that instead of building these very large gold-plated projects, we focus on just those elements that we really need and that would pay for themselves.
And then you've got a state here in Oregon with with very highly dependent on income tax. And if we have a slowdown in the economy, and where are those funds in the state budget, how you start allocating. I mean, I think there's always been that issue here without a state sales tax. So we always feel as if we're, looking for more pockets to fill. So it's tough how ODOT's going to be able to cobble up more of that, or especially without the federal funding to get these things through.
Yeah, and make no mistake, the state budget outlook for the next few years is I think, very challenging. Again, the federal budget is going to make major reductions in revenue going to the state in two ways. First of all, the tax treatment that's built into the big beautiful bill is going to, unless we disconnect from the federal tax code, is going to cost us several $100 million in the next biennium. And then cuts to federal spending, particularly in medical care, in the Medicaid budget, will also add additional costs to the state budget. So we're going to see, and as you point out, state income tax revenues tend to be very volatile, particularly the corporate income tax and capital gains taxes. So there's a likelihood that our state budget situation will be much more constrained in the next 2-3 years than it's been in the past, say, 5.
And are you worried that Oregon's at a kind of a disadvantage to other states that aren't on that depend, or do you see this going across most other states?
Again, I think for the most part, these same factors affect all the other states. The cuts to Medicaid funding clearly affect a bunch of other states. I think the fact that we rely more on the income tax, more on capital gains tax, and a corporate net profits tax than other states makes us somewhat more vulnerable than the typical state.
And then looking, where we are, what's keeping you up at night, looking in the future? Is it the demographic changing of, lack of immigration, population? What's going on in D.C.? What are the things that concern you that's going to help us, I guess, turn the corner or, maintain and not continue the path that we're going on?
Well, again, divide this into two pieces. One is this normal cyclical, or I shouldn't say normal, but regularly experienced cyclical changes in the economy. And I don't worry so much about that. What I really worry about is that what's being done right now is fundamental damage to the foundations of the economy. Things like investments in research, education, our openness to global trade. And the U.S. has been the leader in pushing free trade. We've been doing that since World War II.
Exactly.
And have basically eliminated tariffs between most of the countries in the developed world. And basically we're turning back to this mercantilist period where we balkanize the world, and which produces real costs to people. It means things will be more expensive, be more inflationary in the short term, but it limits our ability to grow. And Oregon is a state that's done well in this globalized
environment. We've done very
globalized
well.
Economy. And again, the health of our economy in many ways depends on our openness to immigration. And there's a lot of hostility to immigration. And particularly, you can point to food processing, you can point to construction, but most importantly to the high-tech sector. If you go down to Silicon Valley and look at who the CEOs and chief technology officers are of most of the high-tech companies, they're people who came here from all over the world, the best and the brightest people in the world, because this is a place to get a great education and provide a great opportunity. And that's powered our growth. That's true of a lot of the Oregon tech sector as well. It's our openness to new people, to new ideas, that has driven our economy. And I think when we turn our backs on immigration, we do fundamental damage to the long-term growth prospects of the economy. And that's what I worry about.
And like you even brought up, with our location, highly susceptible, trade and all that. We're a little bit different than, say, Middle America with, the Midwest or something like that with what we're tied to. So it is a little concerning because you look at who's asking for visas and things like that from the company standpoint to fill those employment spots.
Mm-hmm. Yeah, and I think it's, it isn't so much about geography as it is about your industrial structure,
Right.
what your industries are good at. And we've been actually a very innovative, creative economy, and very globally connected. You think about the companies that are here, like the Intels, the Nikes, the Adidas America. They're all companies that work and operate on a global level and are all about creating new ideas. And anything that we do that damages our ability to nurture those companies and to grow more like them, I think really damages us in the long run. And the other thing I just mentioned is one of our leading export industries in the United States is higher education. We draw
From everywhere.
From all over the world who come here to study because we have great institutions of higher education and openness to folks. And again, that's very much in danger. And I think initially you lose, it does damage to higher education because they make a lot of money off of those foreign students who come here and pay tuition. But in the long run, it does damage to our economy because we have less of the human capital that's helped propel the
Right, because we've always been the
in long term.
benefit of the brain drain coming in here from
Exactly.
other. Yes.
Exactly.
And now that slows down. Will you slow innovation? Again, you may not see it today or tomorrow, but it's like you brought up in the future, some of these things.
And the other thing I would hasten to add here is, I've been kind of narrow and clinical and mercenary in describing immigration. A fundamental value of this country has been and always been, that we are this place that welcomes people from all over the world.
Right.
You have the Statue of Liberty in New York Harbor. My grandmother migrated here from Central Europe a little over a century ago. And that woman holding the torch beside the door, and Emma Lazarus's poem saying of how we lift the lamp beside the golden door for the world, that's a fundamental American value, and I'm afraid it's being damaged irreparably. And I obviously care about it from an economic perspective, but I think it does real damage to our country as well.
So like you said, some of the pillars are definitely getting shaken right now.
Yeah, absolutely.
So, well, thanks for taking the time to come speak with us today.
Sure.
I'm sure we'll do it again, and it'll be interesting to see what happens here from a, state and national, and locally from some of the budget areas things, and whatever happens with ODOT, I'm sure we'll be keeping. And people want to get more information, they can go to the website below here. And Joe, thanks again, and we'll have you again next time.
My pleasure.
All right, we'll see you next time on Multifamily Market Watch.
Our entire office specializes in multifamily real estate, making HFO the largest multifamily brokerage in the Pacific Northwest. Your success is our passion. Build your legacy with HFO. Call 503-241-5541 or visit our website at hfore.com for more information. HFO is a member of Global Real Estate Advisors. Learn more at grea.com.
Love the insights? Tap the like button and click subscribe. It helps us bring more multifamily news straight to you.